Dear learners, as we closed our supply planning with best options in previous meeting, now let us move to the financial integration stage, also commonly known as the pre-S&OP meeting. This step plays a very critical role in the overall S&OP process because it connects operational plans with financial reality. In this meeting, the main accountability lies with the finance leader, along with active participation from the manufacturing leader, buying leader, and other operations team like stores. Let us assume Miss Fabiana is our finance leader. She joins the pre-S&OP meeting to review and evaluate the supply planning options proposed by Sophia from stores, Michael from manufacturing, and Brian from buying. Her role is not just to approve numbers, but to deeply understand the cost impact, cash flow requirements, and overall financial feasibility of the proposed actions. Fabiana carefully reviews each option discussed during supply planning. Together with the team, she also explores whether there are any opportunities to reduce costs without impacting service levels or sales. After evaluating multiple alternatives and scenarios, the team jointly concludes that the plan proposed by Sophia, Michael, and Brian makes the most sense when comparing additional cost versus incremental sales revenue. The team also concludes that they need to work on additional capacity in next year, considering the demand for high-end laptop products will go up in next year, and this becomes an action item to talk with the executive leadership for further directions. The action item remains on Fabiana, as the capacity extension remains a major cost impact to the business. Now let us clearly understand this through the table discussed in the meeting. The first action is developing a new raw material supplier in March, which has an additional cost of $500. This cost mainly includes supplier visits and the approval and onboarding process. The second action is starting extra shifts from August to produce 30 additional laptops per month, which requires 2 additional workers working 8 hours a day at a wage of $20 per hour for 5 months. The total cost for this action comes to $33,600. The third action is leasing additional storage space to store extra laptops produced. This involves storing laptops at additional cost, resulting in an additional storage cost of $2,250. When we add all these costs together, the total additional expense comes to $36,350. Now, Fabiana compares this cost against the revenue side. Due to increased demand, the business will sell an additional 450 laptops, mainly for business series, each giving revenue of $800, generating a total revenue of $360,000. This clearly shows that the incremental revenue is significantly higher than the incremental cost. Based on this analysis, Fabiana confirms that the proposed supply plan is financially viable, profitable, and worth executing. This is exactly why financial integration is so important. It helps the organization clearly understand how funds need to be allocated across departments and also helps forecast future cash flow requirements with much higher confidence. Once this financial consensus is achieved, the output of the pre-S&OP meeting becomes a financially aligned demand and supply plan. The plan is formally approved by Fabiana over an email and is good to go ahead for discussions in next step. Now, the final step of the S&OP process is the executive review. As the name suggests, this is a meeting with senior executive leadership where the overall plan is reviewed at a strategic level. During the executive review, leaders may provide final feedback, suggest adjustments to demand or supply plans, and formally approve the plan for execution across the organization. With this, the S&OP cycle moves from planning to execution, ensuring that business decisions are aligned operationally, financially, and strategically.
So, hopefully you have now understood the outcome and purpose of pre-S&OP meeting, where planning is made to align demand and supply plans with financial targets like revenue, cost, and margin. It also helps to compare multiple scenarios and their financial impact on business. Further, this step highlights trade-offs between service level, cost, and capacity, which helps to identify gaps versus business plan in early stage. And to conclude this step, it recommends the best financially viable plan for executive S&OP approval. Now we will talk about our final step, which is executive review or executive S&OP in our next session. Thank you and stay tuned.